The Eurozone's sovereign debt crisis threatens to engulf Spain. Pressures on the ECB to do something to stop it. But will this make the bank a bailout tool for politicians? The very scenario Trichet has tried to avoid. Well, joining me now to talk about this and the ECB rate decision today in Frankfurt is Nicholas Spiro, Director of Spiro Sovereign Strategy. Hi, Nicholas. I suppose as far as ECB meetings go, this is about as big as it gets in recent months. What are we expecting to hear from the ECB? Because they've been eager to rein in their emergency lending measures, but is now the time to be doing that?
Well, I think certainly on the rate front, I think it's fairly obvious that they will obviously keep rates on hold, and they'll be doing so for some time to come. But the wider backdrop to this is really quite amazing. I think it's actually very, very important to actually realize that half of the Eurozone's GDP is actually growing at a fairly decent clip, which would actually support the case for a normalization of policy. But as you've obviously just hinted, the issue here really obviously is the financial market. So I think what we're actually expecting from the ECB is obviously hints and maybe even a much more clarity on the specifics of how it's going to ramp up its bond purchasing program, which is a very controversial program. And this is raising hackles in Germany for obvious reasons, because that obviously increases the costs of the actual bailout. But one thing which is absolutely clear over the past 48 hours, the ECB's word counts. If you look at what's actually happened in the case of Italy and in the case of Spain, the ECB has essentially been able, just by hinting at the prospect of actually ramping up its bond purchase program, and actually putting a lid on the yields. So essentially, Trichet right now is the main.
Well, he's the last line of defence, isn't he? He's the only game in town, isn't he?
He certainly is the key player here, and his word counts. And I think that his defence of the euro is something which now the markets are obviously not underestimating.
But reining in emergency lending operations, or giving us some sort of hint that it's going to take place, that might spook the markets and send yields higher. Isn't that the risk today?
I think that what the markets are actually looking for now is stability. Some sense that what clearly is a very debilitating and frightening scenario is going to become at least less frightening. And I think that the ECB can be fairly encouraged by the fact that its words have actually had a fairly desirable effect, shall we say, over the past 48 hours. But obviously, we'll have to see what the ECB has to say.
Sovereign risk is your thing, Nicholas. I mean, how do you price sovereign risk in a time like this?
Well, it is extremely difficult. It's very important to actually realize that the mispricing of risk, which we saw over the last decade or so, essentially lulled the markets into a false sense of security. The repricing of risk is obviously a much more disorderly and a much more abrupt thing. And I think right now, essentially, what we're actually finding out is that basically there is a certain amount of overshooting here. Essentially, the market's mispriced risk over the last decade. Now there is a sense that perhaps maybe they are actually overreacting. We are very strong on differentiating between countries. Very important to actually realize that Spain and Ireland in many ways have nothing to do with Greece whatsoever. This is a private debt issue. If you look at the composition of these countries' debt, the bulk of the debt is private. So this fixation on fiscal austerity, which a number of people have, is something to be, as far as I'm concerned, it's simply the wrong thing.
Nicholas, we've got to leave it there, but thanks for joining us today. Nicholas Spiro there from Spiro Sovereign Strategy.